Good to have you with us, Kevin. Just how bad are the auction numbers at the moment?
Oh, well, look, I think the auction numbers, as you mentioned in your introduction, are displaying a mixed performance across the markets. But of course, the two that we pay most attention to, being the biggest markets, are Sydney and Melbourne. And there's no question that over the last year, we've definitely seen those markets retracting, and the clearance rates, as well as the number of auctions occurring, have definitely been retracting. And some of the figures that we're seeing in clearance rates are the lowest since the sort of middle of 2012.
Now, this trend is predicted to continue. How do you see it performing over the next 12 months? What do you think that we can expect?
Well, I think it's fair to say we've seen a softening in the markets. We've seen more stock generally coming onto the market and remaining on the market. And that is continuing to exert a downward pressure on clearance rates and also a downward pressure on participation, the number of auctions that occur. Look, that doesn't look set to change quickly. And one of the other main features that we've drawn attention to is simply the availability of housing credit. Restrictions on investors to start with, but now with affordability testing and serviceability testing actually making it more difficult to obtain a mortgage now than perhaps for quite some time.
Kevin, some experts say that auction clearance rates are really irrelevant when you're considering the broader health of the market, I suppose. What do you think? Do you agree?
Look, I think each measure that we use probably tells you, different information about the market, and it's what you use them for. So I would agree that there are other measures like days on market, the amount of stock on market, the level of vendor discounting in the private treaty area, all of which speak to market health. But one of the things that we like to look at is, for example, you mentioned about the spring selling season. In Melbourne today, there are over 500 more auctions than last week. Now, by 6 o'clock tonight, we're going to have auction clearance rate results, which will actually, that'll tell us something about the performance of the Melbourne market today in the face of that increased auction activity. The other measures that we have may give you a really good indication of what's happening in the market, but they're not going to tell us that until maybe a week or two out into the future.
I'm wondering what does the low rate sort of actually mean? I mean, we know traditionally more properties come on the market into spring because it's a nice time. We've also had, particularly in Sydney, lots and lots and lots of rain, which has affected the new build market for all properties. What do you think that is actually, translating to?
Well, I think the clearance rate being lower than it has been for a while is we paint that perhaps as something which is a bad thing, but there are opportunities there. We're seeing increased first-time buyer activity if they've got their finances in order and they're able to service the loan and they've got a deposit. They may be facing a little bit less competition from investors, so this may be a good thing for that market segment.
In terms of the auction clearance rates, if we just separate it by capital city, and you mentioned at the start of the conversation, obviously Sydney and Melbourne are really driving things at the moment and making headlines everywhere, but there's a lot of variance between the states right now. And I note that even Sydney, I think there was fear that we were going to be in that 40% zone for the first time since the global financial crisis. So there's been a huge amount of, I guess, worry, particularly for the Sydney market. But tell us just how we're sort of seeing that divergence playing across the states right now.
Well, thank you for the question. You can see that I'm speaking to you from Adelaide, and to have the opportunity to mention Adelaide in a really positive light is great. So thanks for the question. If you have a look at the Adelaide market, we're still sitting in for a spring clearance rate at just over 60%. So it has edged down a little bit since last spring, but nonetheless, the market in Adelaide has remained fairly steady. And in a period of growth in Sydney and Melbourne, the fact that the Adelaide market has been steady hasn't really captured much attention. But I think now we're seeing softening markets around the country. The fact that Adelaide is still steady is something that's worth noting.
It's interesting from those figures that we just had up on the screen that Sydney and Melbourne were roughly about 50%, but so was Tasmania, and yet we saw Tasmania being very strong for quite a while there, particularly again from Sydney and Melbourne buyers going down there. Do you think now that they're just all being lured with the great wine you have in Adelaide and they're going to you instead?
Oh, look, the wine was certainly a draw for me when I decided to move to Adelaide. Look, I think the thing with the Tasmanian market, and it's true also of other minor markets, auction markets, being Brisbane and Adelaide and Perth as well, is there isn't really this sort of cultural acceptance of auction as a method of sale. So, you know, we've got what I would consider a fairly big week in Adelaide at 126 auctions, very similar volume to Brisbane. But if you go to Hobart and Tasmania, there's really only a handful of auctions. And that does make auction clearance rates a difficult thing to track because they're quite volatile with such low volumes.
Let's talk about some suburbs in particular, and you might be able to just walk us through, and maybe we can even start with Sydney and Melbourne being the two big markets here, but in terms of some of the best and worst performing suburbs, can you just tell us a little bit more about what we're seeing?
Yeah, absolutely. I think in terms of volume, Randwick was the highest performing suburb in Sydney, so that's the number of properties taken to auction. The clearance rate in Randwick has been good, but I think the honours were taken by Bondi. Now, if you look at those two suburbs, they are clearly suburbs, you know, where there are good quality houses and they attract a fair bit of interest. If you look at the other end of the scale, and perhaps around Parramatta and Kellyville, they're the areas where you're seeing perhaps a lower clearance rate, and typically that's because the housing stocks in those locations are perhaps more homogenous, so that, you know, something about a property that attracts competitive tension is what's going to make it sell well at auction.
It's interesting, with Kellyville, for people who don't know it from around the country, it's in the outer west of Sydney, but there's a lot of brand new stock there, former farmland becoming housing. But Parramatta, you would think, is a little bit different because it's really, you know, the second oldest city in Australia and it's growing quite fast. I'm wondering why you think that was so low.
Well, I think you put your finger on it when you said it's growing quite fast. I think the stock that is going to auction is perhaps more of the modern sort of stock. I think generally a house which is put to auction, which has characteristics that are desirable, is, you know, being unusual and desirable is something where the selling agent would be looking to sort of tease out that competitive interest and try and exploit it during the course of an auction.
Let's look at Melbourne. Perhaps you can walk us through some of the best auction and markets there versus the worst auction markets.
Yeah, so in terms of the volume of auctions, Reservoir is sort of leading the pack. I think there was about 176 auctions there over the last quarter. The clearance rates, it's interesting, in Melbourne are much more evenly spread. There are certainly you know, sort of areas of inner Melbourne where the you know, the desirability of the housing stock results in a higher clearance rate, but also it's about commutability as well. And one thing that that is interesting about Melbourne is one of the best performing areas has actually been Geelong. Now we count that as a regional market rather than part of the capital city market, but Geelong, sort of with lifestyle, affordability and now commutability to Melbourne, has actually been a really strong performer up until the last month or so, when it has started to succumb to the softening market conditions that you see in Melbourne.
What about the worst down there?
Look, I think some of those suburbs, I think Frankston is there as well. Again, you've got a fairly significant supply of housing stock that you know, the houses are fairly similar to one another. If you don't have that point of distinction, as I say, to excite that competitive you know, competitive bidding that you need for an auction, then it is going to make it more difficult to sell a property by that method.
But there's a lot of people out there watching, of course, with finance in mind, but as you're saying, it's easier for people buying this sole property rather than investors who are finding it harder to get the money. What would you be advising them at the moment when they're looking to sell in this, or, you know, vendors rather, trying to sell in this market?
Yeah, look, I think vendors need to choose an agent really carefully. I mean, in a market that we have at the moment where there's a reasonably plentiful supply of stock on the market and relatively few purchasers by comparison,